Hey guys, welcome back to Stacking Stocks, and thanks for joining us today. We sure do appreciate your support. It's about to get exciting in here, so you better hold on. NEO has so much in the pipeline for 2022. Consumers and investors should expect some great projects in the coming days. So, what do you think it's going to be? Well, stay tuned because you're about to find out. Let's hit the ground running. NEO has 341 supercharging stations with 2,176 supercharging piles, 517 destination charging stations with 2,878 piles, and access to more than 400,000 third-party charging piles. So does it mean that there will be more charging stations coming up in 2022? The Chinese Lunar New Year holiday is a peak travel time for the public, and NEO wants to significantly expand its battery swap station coverage along the highways before then. We believe the purpose is to make it easier for its customers to travel by car. The electric vehicle company recently announced that it will have a battery swap network covering 8 major highways and 4 densely populated metropolitan areas by the Chinese New Year in 2022. The next Chinese New Year will come on February 1st, 2022, and no official schedule has been released, but the holiday is usually 7 days. The holiday is typically a time for people working in major cities to return to their hometowns, and we'll also see one of the world's largest population migrations, although it has waned in size in recent years due to COVID-19 concerns. According to NEO's plan, the company hopes to complete a battery swap network along 5 north-south highways and 3 east-west highways by then. Now we can see why 2022 is going to be an interesting year for NEO. So let's talk about the highways being considered for battery swap stations by NEO. The 5 north-south highways are G1 Beijing-Harbin Expressway, G2 Beijing-Shanghai Expressway, G4 Beijing-Hong Kong-Macau Expressway, G5 Beijing-Kunming Expressway, and G15 Shenyang-Haikou Expressway. The 3 east-west highways are the G30 Liangwangang-Horgus Expressway, the G50, which is the Shanghai-Zhongqing Expressway, and the G60 Shanghai-Kunming Expressway. The 4 metropolitan areas the company hopes to cover are Beijing-Tianjin-Hebei, Yangtze River Delta, Guangdong-Hong Kong-Macau, Greater Bay Area, and Chengdu-Chongqing. William Li, the founder, chairman, and CEO of NEO, said that the company's number of battery swap stations covering the highway now stands at 99 and will increase to 169 by the Chinese New Year. This is really crazy. And it doesn't end there. Notably, NEO has previously built battery swap networks covering the G2 Beijing-Shanghai Expressway and the G4 Beijing-Hong Kong-Macau Expressway. On September 20th, the company announced the completion of its battery swap network covering the G1 Beijing-Harbin Expressway, making it the 3rd fully connected expressway battery swap network. The G1 Beijing-Harbin Expressway is 1,229 kilometers long, and NEO has provided 10 battery swap stations along its route, one every 120 kilometers on average. In addition, NEO announced on September 16th that with 3 new battery swap stations in highway service areas in operation, it had completed its network of battery swap stations in highway service areas from Beijing to all major cities in the surrounding area. The network consists of 12 highway battery swap stations centered on Beijing, covering the service areas in Hebei and Tianjin on 7 highways: Beijing-Shengde, Beijing-Harbin, Beijing-Lhasa, Beijing-Chongli, Beijing-Shanghai, Beijing-Hong Kong-Macau, and Beijing-Qinhuangdou. According to the data we collected as of September 21st, NEO had 517 battery swap stations in China. An increase in the battery swap stations is just what consumers are looking forward to. Goldman Sachs sees significant upside in NEO once it begins to deliver its flagship luxury electric sedan, the ET7, from early 2022 for 4 broad reasons, namely the product design, the price point, the evolution, and the battery-as-a-service plan of the ET7. Goldman Sachs compares it with premium sedans from BMW and Daimler's Mercedes, and expects ET7 sales to reach levels similar to those of the BMW 7 Series and Mercedes S-Class, which sell more than 10,000 units per month in China. Goldman Sachs believes the ET7 should strengthen NEO's brand equity in the premium space, given that it's the most expensive model launched yet by a local manufacturer in China. The ET7 will also put the NEO autonomous driving technology on full display, given its features like 33 sensors, including high-resolution cameras and LiDAR. Furthermore, NIO's BaaS service will make the ET7 more price competitive as customers will have the option to buy cars without batteries and instead lease and swap them at power swap stations. Given NIO's pace of growth and upcoming models, Goldman Sachs' bullish view on the stock is one to go by. But there are also risks facing NIO stock. So let's particularly talk about the stock's figures and performance. NIO stock has been one of the market's biggest winners over the past 2 years. Since the beginning of 2020, shares in the electric vehicle manufacturer have jumped nearly 1,000%. Unfortunately, most of those gains came last year. Over the past 12 months, the stock has fallen 22%. And as concerns about the state of the global economy, China, and the EV space continue to build, we think the stock might face other challenges in 2022. But that doesn't downplay the EV company's positive strides in the industry. NIO's technology is incredibly impressive. Unlike other EV producers, the group's cars are powered by replaceable battery packs. This means they're easy to swap on long journeys, allowing users to extend the range in just a few minutes. While this technology is revolutionary, numerous other organizations are also trying to edge in on NIO space. Meanwhile, the company is fighting for market share with larger peer Tesla. Its dominant rival is on track to produce around 1 million vehicles this year, and it's targeting the production of 20 million cars per annum by 2030. So NIO needs to do a lot to reach such levels. NIO's output will only be 240,000 vehicles a year, up from 120,000 units after it doubles the capacity of its plant in the eastern city of Hefei. Management is targeting an output of 600,000 units a year by the end of 2022. If the corporation can hit these production forecasts, we think the market will take a fresh look at the enterprise. And if it can edge closer to earning a sustainable profit, the company's value could potentially increase substantially from current levels. Still, NIO is struggling to catch up to Tesla's production, and it's only going to become harder for the group to expand sales as the market for EVs becomes much more competitive. On top of these risk factors, there's also concerns about the growing war of words between China and the U.S. This could have a significant impact on U.S.-listed Chinese equities, and that's without considering the winding down of quantitative easing by the Federal Reserve. This is already having an impact on inflated growth stock valuations as investors revisit their valuation models. These challenges could all have an impact on NIO stock in 2022. As the company is not yet profitable, it's also difficult to value the stock and estimate how much it could be worth. That means there's no benchmark to hold on to if the shares should suddenly drop. Well, every cloud has a silver lining. A confluence of factors, including the ongoing supply chain challenges, lower October vehicle deliveries down 27% year over year, and restructuring of the manufacturing lines took a toll on NIO stock. There's also the overall selling in Chinese stock following the government's increased regulations. But could 2022 still become a big year for NIO? Consider the 3 new model launches, production capacity addition, and expansion in Europe. Notably, during the third quarter conference call, NIO CEO William Li stated that the company will enter 5 new European countries in 2022. There's a lot in store for NIO stock in 2022. NIO managed to double the EV sales in the third quarter, and if you look at the year-over-year sales growth each month, it's nothing but impressive. As you can see, things are not as bad as some analysts would put it. Maybe Goldman Sachs' bullish point of view is worth considering. Well, that's it for today. If you enjoyed the session, remember to like, share, and subscribe. Don't forget to drop your opinion in the comments section as well. Stay safe and see you next time, guys, right here on Stacking Stocks.